So, which one of you were at Decipher last year? I didn't make it. I was stuck in Singapore.
In Miami, my hometown.
Yeah, your hometown.
I stole a pillow with NFT on it. I still have it in my car. Yeah.
NFT pillow.
Yeah.
So it's a phygital, like you have a token in your phone and you can sleep on it too.
Yeah.
Well, what do you think, Miami or Dubai? What's your venue preference?
Well, I live in Miami.
Okay, so you like to get out, have a little vacation.
But Dubai is a fantastic city, and anytime you get out of the U.S., you get a group of people who aren't Americans. It makes things more interesting, in my opinion.
It's quite
I think
international.
it's great to do it here.
Totally. I mean, I live in Singapore, but I have to say Dubai feels a lot more of a vibrant international scene than even Singapore. There's a lot going on.
I think India next year.
India, okay.
Okay.
We're going to have to do a show of hands, like decipher which country, which city. We'll do a poll later, Twitter poll. Anyway, so gents, thanks for joining us. Well, why don't you briefly introduce yourselves, talk a little bit about, where your experience in Algorand, the name of your fund, kind of what you're focusing on and what you're excited about, and then we'll get into a more broad conversation. So why don't we start with you, Arul?
Yeah, sure. Arul Murugan, founding managing partner with Borderless Capital. So me and my partner, David Garcia, started in 2018, and we have invested in 160 plus companies. So I think we go full-fledged across the Algorand ecosystem. Our sweet spot is seed, but we also invest in early-stage growth companies, and we have done 5 accelerators along with the foundation. So my background is a serial entrepreneur, exited my business in 2015 and become a VC.
I'm Mike Arrington. I run Arrington Capital with my partners. I've been in tech my whole career. Went to law school in Silicon Valley in the 90s. I'm probably the oldest person maybe in the room. So I was there for Web 1. I was there for Web 2. I started TechCrunch, covered all of Web 2, venture funds, got into crypto in 2017, and again, a full-time way, and I'm more excited about this than anything I've ever seen in my life, well beyond Web 1 and Web 2. We are a hedge fund with a barbell strategy. We do venture investing and liquid, but we created a special fund for Algorand, a dedicated fund, and the whole point of this fund is to build this ecosystem. So obviously to make money for our investors, but to build this ecosystem. We're also focused on seed, like Borderless. We do a lot of deals with Borderless, a lot of deals with Hivemind, but we've written checks from $25,000 to $50 billion. As a hedge fund, we have the flexibility to do that. We like to write the first check in a company, and then we like to support them all the way to whatever their final destiny is. We did that with BlockFi, by the way, and their final destiny sucked, but it happens, so, yeah.
Great. Matt Zhang, I'm the founder and managing partner of Hivemind, and glad to be here. And we actually launched our fund around the same time at Decipher last year. Some of you guys may actually remember. From my previous life, I've been on Wall Street, been a structured product trader for 15 years, used to work for Citigroup, and decided, to jump full-time into crypto. I've been, buying and trading Bitcoin as a personal hobby since 2014. And I actually remembered last year when Mike and I was on Decipher panel, he's, telling me I only been in crypto for 5 minutes. And I told him that was the best 5 minutes in crypto I ever had. Unfortunately, that turned out to be true, actually, this year.
It was literally, when you started your fund is when the price of Algorand started to fall. Yeah.
Are those two correlated?
So, but yes, I mean.
I'm just saying, it was $1.75 the day you started your fund. So
Exactly right. And, but look, I mean, it's a very eventful year, and glad to be here and sharing everything we learned and seeing in the market. Very, very quickly, our first fund, we raised actually over $1 billion. It's a multi-strategy fund, similar to what Mike mentioned earlier. We actually do both venture investing and trading strategies. Early this year, some of the investment we made, for example, we led acquisition of Napster, among many other things. We actually have some more exciting announcement later today about another very interesting acquisition and investment we actually are making. We also trade a lot. That's actually my background and some of my team's background. Algorand is one of the most important ecosystem we support so far, and we see a lot of interesting stuff coming out, and more than happy to talk about it more.
Awesome, cool. So yeah, obviously a wide range of kind of backgrounds and experience on our panel here. everybody's got lots of years experience kind of riding market cycles. I mean, tech innovation, it booms, it busts. Crypto is no exception, and crypto even accelerates harder than your average economic expansion or contraction cycle. But I wanted to ask you guys, what do you think makes this kind of crypto winter or bear market we're going into the same or different than any other one? Is it shifting public sentiments towards the space? Is it the macroeconomic conditions, pulling down risk capital? Like, what do you guys see as the similarities or differences for what we're about to go through in 2023?
Yeah. No, I think I'm a big fan of market cycles. I think we all know that. I think the history doesn't repeat, but it rhymes. So just to give an example, I think we started Borderless Capital at the depth of the winter in 2018. So we launched in New York, and at the time, the price of Bitcoin is like about 3,300 or something like that. So I think the way I look at here is that we should feel stronger during the down cycle because we know that there is an up cycle. So, but always feels bad. One difference I would say that I think this is the first time crypto is seeing with the macroeconomic climate that we are facing right now, that is real. I think from the launch of Bitcoin in 2009, we are not seeing the deviation between the macro and where it is. I think, so now we are seeing it. So I think overall it's positive from my perspective, but we need to be prepared for a little longer cycle with what happened with the FTX. The good thing, I think the Algorand ecosystem is a little bit more isolated with the event, so we look a little bit more stronger, which I think is positive. So from my perspective, I look at is that it's not that different from the regular market cycle. So I think look for the upcycle, and we look at here as an opportunity to invest in good projects. And by the way, we just did the initial close of Algo Fund 2, and we're looking to invest in companies in the Algorand ecosystem.
Fantastic. Mike, any thoughts? Many thoughts.
Well, look, I've been doing this a while. In the downtime, everybody says the same thing, including me, which is, sucks, it'll get better. We've seen this before, stay strong. There's obvious advice, like don't do leverage in a falling market. Matt can probably talk about that, not because he's done that, but just as a trader, you understand. But this is different.
Yep.
We are in a global macro situation that is a total shit show. And the respected market researchers have said and are saying that the market conditions are things that they have not seen in their lifetime, and some of these guys are 70 years old. Sovereign debt is at a crucial level, and we are in a sovereign debt crisis in the beginning stages of it. It feels like we're also in possibly the early stages of World War with China and Russia. And so I'm extremely nervous about everything. And the one bright spot for me is that Bitcoin was originally invented to sort of be an opt-out clause like gold was. And so if it ever fulfills that goal, it'll be the place to be as a safe haven. But I'm nervous. I'm like extremely nervous about the global situation right now, and it feels different to me than it felt at any other point in my career, certainly 2008, definitely 2018, and it has nothing to do with crypto. Crypto, luckily, because of Three Arrows and all the other fuck-ups, is completely deleveraged now. I mean, completely deleveraged. And so that means that Bitcoin's holding up pretty well in this market. But I'm extremely worried about the next decade. And like, wow. And so, yeah. Sorry, trying to be cheerful.
Worried about the macro or just crypto?
Well, I mean, as we saw this year, the macro tail wags the crypto dog, and it is the same thing right now. I mean, ETH is a leading indicator on the NASDAQ. That's just, it is what it is. And so until it isn't that, we have to assume it is. And so I spend 95% of my day looking at macro indicators, reading research, talking to smart guys like Matt who understand markets. And I am very, very scared right now. There's an energy crisis, there's a sovereign debt crisis, you have a hot war in Ukraine, you've got possibly the beginning of a hot war with China, you've got, things are fucked up right now. Mm-hmm. Can you swear in Dubai?
Kind of
broken a lot.
security.
kind of agree with both of them to some degree. Like I think if you look at the history, right, like I actually started my career in 2007, right? Just like what Mike said earlier, when I joined Citi, also Citi trading the all-time high too. So I don't know if it's like a pattern or something. But
Yeah.
anyway, bottom line is, actually.
You caused us the 2007?
So my career was started in the bear market, and that one I remember very vividly, and it was a bad one. I think if you zoom out, every single cycle look similar in the pattern. But if you zoom in, every single cycle was caused for different reasons, one through a different type of pain. And when you get out of the cycle, it was typically for a reason that you don't expect. At a time you don't expect. And then the market starting to recover. And I remember this very vividly from the 2009 moments where everything was, giving up the hope and stuff, like things really starting to stabilize and felt better. So I agree with Mike in the sense that we still spend a lot of time on macro. I think this time, if there's any different from a specific standpoint, it's not just a crypto crisis. I think it's a macro crisis, and then we happen to be in a part of the cycle that crypto is condense a lot of these issues and happen in a very, very quick way. The other problem of this is because the crypto narrative in 2008, for example, if a crisis like this happens, there is a backstop, right? There is a Fed that actually will making the banking system not completely collapse. For the crypto, I think the community has made a lot of progress, but I don't think we're at a stage where if this ecosystem collapses completely, there's anybody who will be providing that last resort. I'm trying to make things be fine. All that being said, I think the space today is, if you excluding all the stable coins, it's $650 billion. This number last year, Decipher, was $4 trillion. So the question is, who is the marginal buyer and who is the marginal seller? And I think 4 weeks ago, when we're sitting here, there are going to be a lot of the marginal buyer coming from institutional investors.
From what?
From institutional investors. I think the FTX probably has changed the course of if they're coming in and when they're coming in, which means that maybe the bear market is here longer than people think. Maybe we actually haven't even seen the worst, even though that's all we're hoping not to, so, which is more reason for us to making sure we're focusing, building, and investing the right way and the more disciplined way.
So now that we've sort of laid out the bearish case, obviously all these macro risk factors, a high degree of correlation between crypto and equities and stuff, which I think maybe going into the last bull run, people thought, oh, Bitcoin might be an inflation hedge, so if interest rates remain low, dollars are getting printed, that's good for the currency. But now it just, as it delevers, the deleverage also hits the crypto market simultaneously, right? In addition to interest rates, you also have, obviously, systemic risk and exposure between counterparties and all this other stuff happening. But having said all that, is there any cause for optimism? Is there any light at the end of the tunnel? Or are we
Absolutely.
did we totally misname? We screwed up this panel, right? We totally fucked up the
Absolutely, there's causes for optimism. We've had a complete destruction of leverage in the system, but yet DeFi was beautiful and performed perfectly and flawlessly. Now, because of other reasons, the TVL in DeFi is extremely low, but the foundation is there and it works and it didn't fail. And you don't need the Fed or somebody else to come in and save you like they did in 2008 when you don't have, counterparties leveraging themselves off of your money when you didn't know it was happening. So DeFi is clearly the way to go.
Absolutely.
And there's stuff to be built. There's 5% of what we need built has been built that we even know about. And then there's stuff we don't know about yet. So I'm super optimistic. The reason why I'm beating everybody down is because I need you when you come to us and ask us for money to not say, and we want to raise a $10 million seed on an $80 million pre, and then look at me funny when I start laughing at you. You have to understand that things have changed, and you've got to find a way to raise money in a way that's realistic to investors. But the nice thing is there's lots of people unemployed. You can hire them. You don't have to pay them as much as you did. I mean, everything changes in a down market, and this is when the giant companies get built.
And I agree. I think the optimism coming from what has not changed. And what has not changed is the technology advancement is there. And I think even through the course of last year, the adoption of this, the topical situation that people were talking about from the mainstream media and through the communities means this technology is here to stay. right? Actually more focus and attention you're getting from the regulators and communities and investors proven the point that now this is a mainstream topical investment asset class. What we can't tell is, are we getting out of the bear market in 3 months' time or 3 years' time?
Yeah.
So if I
And we truly don't know.
we don't know,
Yeah.
right? I don't think anybody would know, right? And because this is not just about crypto crisis, it's about the macro crisis. So I think if your optimism coming from that you believe in the long-term adoption of the technology, just like 20 years ago about internet, which Mike knows very, very well, I think that's the single most important thing. Like you'd rather that is we're here to stay. So you just have to really focusing on making sure you're building something which is enduring. In the meantime, every single founders out there need to figure out how do they survive the winter. Because the optimism thing may happen in the end, but they need to survive to be able to see it, which means you probably don't really care in January this year what you burn, right? How many people you hire.
Yeah.
You are beta, you go to market, how quickly you can get to the market. Now I think everything comes back and actually become a lot more meaningful. So I think that is something which needs to be changed.
Right.
Yeah.
The fear of God is going to make people find product market fit, innovate on product faster. So it sounds like the arc of human innovation will kind of overcome all the macro conditions at some point.
Yeah.
Just a matter of time, yeah? You agree?
Yeah, I agree. I think talking about optimism, I think I say like be greedy when others are fearful. And as I said, the market cycle continues. So I think if you believe in the market cycle, this is the time. And the way I look at here is that I think with FTX, people are not going to believe in centralized. I think we are going to have much more stronger infrastructure being built for the next stage of DeFi and other things. So we are going to remove a lot more intermediaries. I look at the next market cycle is going to be the real mainstream, the real world use cases. So I think in Borderless, we are going to be a lot more focused on the real world use cases. I think when we started in 2018-19, there's not much to do that actually. So now what we're looking at is that the infrastructure is built. We are truly there to have the real world use cases. So I look at that as very, very positive. If you look at, I think in 2018-19, we said that, hey, it's better than the previous cycle, but this time I strongly believe that we would see a lot more real world use cases. I think you saw Sylvia talking about Agro Token and TravelX. I think those are two beautiful examples. And I think we are going to lead with those companies. We led the round for both of them last time, and we're going to continue to lead the round in the next cycle. So that shows our confidence. And I think that's what I would tell everyone, like, don't worry about it, focus on building, and I think focus on real adoption and the real world use cases, actually. So.
Yeah. And at what stage would you like to focus on those? So, like, given all the macro uncertainty at play, what's the sort of trade-off on the spectrum between pre-seed, early, low valuation versus something that's a bit more risk mitigated because there's a product and it's kind of traction in the market?
Yeah, so we look at two kinds of projects. One, if you're natively building in blockchain protocol, there are only two stages. It's kind of a seed and post-seed. There's something like a Series A, Series B, Series C. You just have only one or two opportunities. So half of our investments goes into those protocols built natively, and the other one is more like infrastructure. So a lot of infrastructure projects are equity. So that one, I think we want to invest both in the seed and also in the later stage. So if you look at predominant, I think we are going to be focused on seed stage investment. We believe that is a sweet spot. And so we'll continue to invest in the seed stage. I think our pre-seed investment is going to be through the accelerator. So I think we have been supporting 5 cohorts of accelerator across the globe, and we are looking to continue that in the coming years as well.
Nice. Mike, any tactical shifts in
No,
your
well,
capital deployment based on the market conditions, or just going full steam ahead?
I just like seed. I like seed. I like being the first investor in. We have written a lot of bigger checks in the later rounds, but in every case, I think it's been a company we had already invested in because we already know them. We spent so much time with them by then that I feel comfortable. When we see stuff, maybe like where we passed on the first round, we'll look at the next round. But I like the journey with the entrepreneur, and I like, Matt last year, like, he's an entrepreneur and he started the journey, and it was great watching him get the shit beat out of him all year, and like he comes back, he doesn't look like a puppy anymore, right? But he's been through the war in crypto. He's already through the war and other stuff. Like, you need to be there through those good times and bad times and go through that battle, and then you're invested. So seed is my sweet spot. Also, I'm lazy and I don't like reading financial statements. So there are no
Yeah, no fundamentals.
Yeah, it's just you're investing in a team and an idea.
Lovely.
I like that.
I think that it's easier. Okay, let's take a step back, right? I think given the crypto is so young, there is a tendency of people focus on early stage anyway, right? Because the technologies change so quickly. So you're really doubting what's the enduring value a growth stage company has really built. Is it stable? Is there actually, if you look at a lot of the collapse of the valuation this year, is all of the growth stage company, late stage companies that actually overnight the valuation just brought to the ground. So I can understand why in crypto, a lot of investors tend to focus in seed stage. Combination of the macro environment means like you really want to just back in on the right founder. There's a pattern, and you're very, very focused about the valuation. So seed stage, pre-seed stage tends to give you that type of safety net. Other side of that is, as I said, given crypto, it's so early in its infancy as an industry, it's a lot easier to find a good early stage company than a later stage company. But coming to our investment style, quite frankly, the beauty of crypto is also, we think for the first time ever, you find a way to market the code. You actually, something living on the code and the internet, you put a value to it, and you can invest, you can trade, you can do many things around it. So I want to expand your question to say, forget about the early stage investment, later stage investment. Actually trading it and owning the tokens and staking them is actually another way to invest that protocols too. So I think the trading and investing in the crypto space really getting very, very blurry. So the way we look at it is like we're trying to focusing about thematic-driven verticals. Like we believe in gaming.
Yeah.
We continue to believe in it. We believe in music. We think it's a great use case for blockchain. Now, we're actually getting very bullish about DeFi for everything that's happening. And then you're trying to figure out what's the best companies, and you figure out as companies tend to come from all stages. Like Napster is a great example. Again, they were actually a public company listed on London Stock Exchange. Together with Borderless and Arrington Capitals, we decided to take it private and recapitalize it, which is a great example to say, I think great companies and great founders coming from all stages, but in crypto, there tend to be a pattern, maybe more of them coming from earlier stage, but I think that's not always the case.
Yeah, so always hunting for those diamonds in the rough, even later stage, but also early stage kind of gives a different perspective to like where the markets are going, because you work with those entrepreneurs hand-to-hand combat, see their struggle, and then understand where the market's going a bit from there. So, but I mean, having said all that, you can be super early working with the entrepreneurs. There was a ton of capital deployed and a ton of crypto funds raised in 2021 and 22, right? Like 33 billion in 2021 invested directly into crypto startups, and then just first half of this year has been another $18 billion. So the question is like, where is that money going to flow into if there's like sort of a risk-off mentality amongst a lot of funds and a lot of money managers? Do you see that being thematically allocated, ecosystem allocated? Obviously there's been some gaudy numbers around, Aptos and some other layer ones raising big rounds.
Yeah, the way I look at, I think there's still a lot of dry powder. But if you look at, I think, late 2021 and early 2022, everyone deployed the capital very fast. I think that's a mistake, I would say, overall, the VC industry has done. So if you look at everybody deployed way too much, I think.
At the same time. So
yeah.
then they're all rushing to
People
a
will
small
have
entry to the
yeah,
door,
they will
right?
have a 3 years investment period, but they would have deployed 80% of the capital in less than a year. So I think that's not good, actually. Because everybody thought like, hey, I want to rush, I want to be in. So which is very bad. I think now everybody's kind of taking a backseat, evaluating, which is really good. And we all know that the valuation multiple has dramatically come down across the board. It's not just crypto.
Yeah.
So for me, that's a very healthy situation. I think it's good that we have the valuation that's more meaningful. And I think now the entrepreneurs are also aligned to that way, actually. So what we look at is that now it's coming back. And we at Borderless, we have like virtuous cycles. We think that the value accrual will change over a period of time. So if you look at, I think, in the early stage, we look at layer one is going to want that accrue value. So that's how we looked at, like, we will hold a lot of algos, right? Then after that, it will go into the middle layer, then finally to the app layer. So I think what I look at is that the incremental value will be a lot more happening in the middle layer and the app layer than the layer one itself. So I think everybody thought like it's too late for the layer ones, but we saw that.
Do you really think this way?
Which one?
The way you're talking about, like with these investment theses, like everybody, and I don't mean to be insulting. I truly don't, because I know how great of an investor you are. But I always feel like we invest in whatever we want, and then at the end of the quarter, we like make up a thesis around it and say how we followed it. But I just like investing in.
No, like, Michael, we put this thesis very clearly.
You're like, now is the time to do. We're not doing layer ones. We're doing the app layer or whatever. Like, you truly do that, right?
Yes, we truly do that.
You don't just do whatever you want and then like later on make up a story about what the thesis was that you just followed?
No, not really. It all depends. I think there are people who have done that.
And you won't even take the meetings with the layer ones when you're talking, when you're like, I'm in like app.
No, I think ours is very unique. I think we went all after one layer one.
Yeah, right.
So I think our situation is a little different, right?
Yeah.
I think in our case, I think we put it in writing very clearly. We said that, you know what, very early on, we're putting 100 million algos because we think that we went in very early on when the algo price is like very, very small. And then we said like, okay, we are going to invest into the infrastructure, then we are going to come to the app layer. What I look at is that this is not something invented. This has been there for a long period of time. That is a natural stage of progression. You start with the base protocol, then you build the infrastructure, then app. As more apps are built, then you need more infrastructure. So this is not a new thematic or anything like that. So it's not like, oh, now I figured it out. This has been there for a while.
And
so just follow the discipline.
There might be some value.
Just follow the discipline. I think people don't follow the discipline.
All right, let's say this. Let's say somebody leaves Algorand. I'm sure people leave regularly, and they're going to start a new layer one. You're not going to, and they're like awesome. You're not going to look at that because you're now in infrastructure time or app time?
No, I don't look at it. I think what I look at here is that
you're going to invest in that company.
Which one company?
Whatever, I'm making one up. But if somebody leaves out, there's star developer. One of them leaves, starts a new company, and it's a new layer one. Fuck yeah, you're going to invest in that, right?
Yeah, if I believe in the entrepreneur, you invest in them.
Okay, so the thesis goes out the window in that case.
No, I think there's a question about it, right? What is the general layer? The thesis is that there's a ground framework, and then always there's a, you follow the framework, and then you invest in the best entrepreneur and the best ideas.
I think you look at it ecosystem by ecosystem, right? Every ecosystem's at a different stage in their life cycle, right? So, Algorand's clearly in app mode now, right?
One thing, Michael, we have to look at also is that I think the multi-chain world is coming. I think that's how it is. I think the way I look at it here is also it's not about which app built in which layer one. I think we have been more like tribalism in the past. I think going forward, people are going to look at, hey, the users don't care what's underneath.
You're clearly right. You're clearly right.
That's where I think it has to be,
Yeah, I agree. I think, look, I mean, one of the silver lining, and like, we feel very, very blessed because, if you zoom out and forget about Hivemind, and you ask me what is the best scenario for any fund manager, right? I think coming back to Ryan's early question, you tell them you want to raise your capital at the end of the bull market, and then right before you're deploying it, everything collapses, which is exactly what happened to us. So, as much I think everybody getting hurt about this thing, to more or less degree, I think the one thing we have is a lot of dry powder, and we want to think very, very clearly which vertical from a top-down approach and which founder from a bottom-up approach we both excited about, so we can meet in the middle. But I think, come back to answer your question, Ryan, we may have raised 30 billion last year or something. For the size of industry, clearly it's not enough, right? So I think people just need to get realistic about the funding round and the winter coming. Because it's much easier for us all sitting here and painting a rosy picture for developers and the companies, but that's not what's really happening. I mean, we're doing the pitch every single day, and we can tell you, like, we really trying to making sure the founders realizing that having a year or 2 year runway is the right thing to do, really coming back and focus on the product and do all of this kind of stuff. So, look, I mean, I remain very optimistic about the industry, but just not to ignoring a lot of things that will happening in next 3 to 6 months is going to be challenging, and we have to acknowledge that.
And any other advice, Mike or Arul, on advice you'd give to founders? It sounds like Matt's opinion is basically, be realistic and look at the macro and prepare for a long winter.
There's one advice I've been following since I've been an entrepreneur. Cash is the king. In this case, I think when I say cash, it is the currency in which you spend. If you spend in dollars, then that is the cash. If you spend in algo, that's the cash. So what I really look at people is that if you can survive in this bear cycle, you are going to be the winner. So keep for a long runway. I think with cash, that means don't take any leverage. I think don't try to be greedy. Always we are in the leading edge, so don't need to take even more risk, actually.
Sometimes leverage is good.
Which one?
When it works out.
So you take leverage? You don't in your VC fund?
Of course we do, sometimes.
Okay.
Sometimes it works out, sometimes it doesn't.
So you recommend people to take meaningful leverage?
Not 3 Arrow style, like, tone it down.
Well, you know what I was going to say, and it kind of like, I think the people who are going to win usually don't even ask for advice, to be honest. I mean, I think it's, we're up here talking, yap, but like the people who win usually don't even, like, they know what they want to do and they do it, and I'm looking for those people.
That's
And yeah, you probably shouldn't have,
Everybody knows how to pitch Mike now, you know, just walk into the meeting, here's what I'm doing, you in?
Naval Ravikant said, all Bitcoin has to do to win is not die. And it always struck me like he's very right. And so, you know, every day that Algorand lives, it's winning.
It's a good day. Today is a damn good day.
It is, and it's never gone down, right?
Exactly. 0. Remember that big 0 up there?
So it's winning.
There we go.
Yeah.
Well, we can end with that. We can end with Algorand as winning. So thank you, gents.
Thank you.
It was a pleasure.
Yeah.
Cheers.
Thank you.
wonderful, man.
Good stuff.
Good man.
Thanks, Frank.